Elon Musk wants to buy Twitter. Sorry, Elon Musk wanted to buy Twitter. Whether he still wants to is unclear at the moment, with him seemingly trying to either get out of the deal or lower the takeout price. Well, let's take a step back. What did Elon see in Twitter that initially had him wanting to hand over about $44 billion for the company? There's a few things. Firstly, Twitter is one of the few social media companies that's both publicly listed and does not have a dual-class structure. Meaning, Twitter is one of the few companies that's not controlled by its founders. If you look at Facebook, Alphabet, Snap, or Pinterest, all of these social media companies are controlled by their founders. Mark Zuckerberg has a controlling vote in Facebook, Larry Page and Sergey Brin have a controlling vote in Alphabet, Evan Spiegel and Robert Murphy control Snap, and Pinterest is controlled by its co-founders and major investors. Secondly, Twitter is big enough to have influence in the media space, but small enough to be affordable for Elon to buy. As wealthy as he is, if he was to just use his personal balance sheet, he couldn't afford to buy Facebook, for example, which has a market cap of around $500 billion, or Alphabet, which has a market cap of about $2 trillion. Twitter, at a potential takeout valuation of, say, $45 billion, would still be small enough for Elon to digest. If we look at the actual business case for Twitter itself, there are some interesting things happening. It's a business that's growing and finally getting its act together. In 2021, Twitter put out a series of goals that it is committed to meeting by the end of 2023. These include doubling Twitter's 2020 revenue to $7.5 billion by 2023 and growing the company's daily active users to 315 million users by the end of 2023. So, although the stock price is trading close to where it was a few years ago, if you peek underneath the hood, there is some progress happening in terms of the actual fundamentals of the business. And part of this renewed focus may be because of investor pressure. Silver Lake Partners and Elliott Management invested in Twitter in 2020. Elliott Management is an activist fund known for pushing for change at the companies that it invests in. From the time it invested in Twitter, Elliott Management, apparently, began pushing for two things. Firstly, for Jack Dorsey to step down as CEO of Twitter, and secondly, for the pace of product innovation to step up. While CEO of Twitter, Jack Dorsey was also the CEO of Square, the fintech company that he co-founded. As respected as Jack Dorsey is in the tech space, Elliott Management most likely wanted a full-time CEO rather than someone who'd be splitting their time between Twitter and another job. Also, Twitter has a somewhat unique use case that arguably makes it less vulnerable to competitors like TikTok and Snap than, say, Facebook or Instagram could be. In Facebook's fourth quarter 2021 earnings call, Mark Zuckerberg called out the fact that Facebook and Instagram are facing severe competition from competitors, particularly TikTok and Snap. Twitter's tried to focus itself on being more conversational. People come to Twitter not only to see what's happening, but also to see the conversation around what's happening. And this is something that Jack Dorsey has talked about before. Elon initially offered $54.20 per share in cash to take over Twitter. At the time, some Twitter shareholders, if anything, felt the offer was a bit light and undervalued the company. But the stock market and especially technology stocks have come under massive pressure in the time since Elon made his offer. And so Elon now seems to be trying to wiggle his way out of the deal, either pulling out completely or negotiating a lower price. The recent decline in the Tesla share price also probably doesn't help. It can also be argued that digital media companies, especially the prominent ones like Twitter, Instagram, TikTok, and YouTube, are the new newspapers. That is, in addition to being very profitable, these companies carry with them a huge amount of power. 30 years ago, someone in the US may have woken up every day and read the New York Times, while another person in the UK may have read a prominent UK-based newspaper, and someone in Brazil may have read whatever was the prominent Brazilian newspaper at that time. But today, people all around the world, whether it be in New York, London, or Rio de Janeiro all consume and in some cases produce content for these global media companies. Perhaps Elon recognizes this insane scale, power, and profitability that these companies offer, and maybe that's why he's gone after Twitter.